What's up guys, Raymond again. I'm going to be analyzing another investment today, another stock, and we're going to continue where we left off with German companies. Let's just make sure I'm in the right account. Yep. So we need to go to investments and search, and then we need to go to browse all Germany, and then we go to energy. I believe we left off at Uniper, so we're going to continue with Varta. So as you see, I invested £1. It's down by 14p, which is 14%. Let's just read the company details a bit. It's a German-based company engaged in the administration of its former property. Its activities mainly focused in the management of its own assets. In particular, the sale and liquidation of individual assets, contracts, liabilities, and shareholdings relating to the business areas previously managed by the company itself and its subsidiaries, especially the manufacture and sale of Varta batteries, including the administration of assets acquired or held in this respect. The company's majority shareholder is ETV Holding AG with 94.82% of its interest, which is an insane amount of stake in a company to be held by only one party. The CEO is Herbert. The employees are 4.6k. The headquarters, of course, is in Germany. Sectors: technology, industry, electronics and controls. The market cap is 4.3 billion. P/E ratio is quite high. It's above 10. 10 is the number that I look for. 10 or just about around 10, floating around 10. So 46 is quite high. I would say that means it's quite expensive at the current moment. The revenue for the year was 869 million, so a little bit short of a billion. Compared to the market cap, it's about 10%. Sorry, it's about 20%, just under 20%. Earnings per share is 2.86. So compared to the market price, it's quite low. 2.86. The earnings per share is quite low. The dividend yield is 1.86, which is very low also. So the only other positive aspect of this, or there's two other positive aspects of this that could make the stock a good investment. The first being net income. So we'll check that in a second. Sorry, not net income. Sorry, profit margin, which they're pretty much the same. And the cash flow statement. If the net change in cash is quite high, then that could also make it a good investment. But then again, if the net change in cash is high only for a year and low in the other years, we'll have to balance it out and see what the overall advantage is. So we're looking at the balance sheet, the income statement right now, and the profit margin for the year is 10.97%. It looks quite consistent over the past 3 years, which is pretty good. Of course, they increased their revenue quite drastically from this year, or in the year 2020, as compared to the year 2019. The year 2018 and 2019 weren't very different in terms of revenue, but the profit margins were quite different. The profit margin, I believe, in 2020 reflected the increased revenue. So the 10.97% is decent. It's like the very minimum in terms of what I look for a good profit margin. The debt to asset ratio is also very important. It has to be around 50 or lower. If it's any higher, then the interest rates might just ruin the profit margin. So if the profit margin is around 10 or lower and the debt to asset ratio is really high, then I wouldn't see it as a very good investment, because the interest that the company would need to pay would wipe out too much of the profit. So 55% is okay. So let's look at the cash flow statement, what we've been looking for. So the net change in cash is a minus, it's negative, which is not good. It's only 122 million, which is not too much of the capital that the company has. 2019 was positive, 95 million. It doesn't quite recover the loss in 2020. 2018 was 11. So combined 2018 and 2019 is about 110 million or 116 million. It doesn't quite cover the 122 million lost in 2020. But then again, the profit margin was okay. The debt to equity ratio is not too bad. So overall, this is not too bad an investment. So I hope you guys have liked this video, and I hope you look forward to seeing more investment analysis in the next few videos. Thank you so much. See you next time.